Hello, I'm Greg Hunter. Welcome to USAWatchdog.com. Money manager Peter Schiff from Euro Pacific Capital. Also, the brand newly formed, or fairly newly formed, Schiff Gold. Peter Schiff, thank you for joining us today from Connecticut.
Thanks, Greg, for having me on. And, Schiff Gold, it's not brand new. We just changed the name of Euro Pacific Precious Metals, which has been around for a few years, to Schiff Gold.
There you go. Well, I mean, the newly named, renamed, whatever, Schiff Gold. You're a good guy and you're a smart guy, which is why we want you to come on. And the news overseas with Greece, I mean, the headlines are all over the map. They're going to get a 6-month extension. The Greeks are looking like they're not going to do anything with the bailout. They're making noises that they're going to get help from Russia and China. One European official said it was berserk and there was no plan. And what's going on with this whole Greek? This is a small country that is causing a lot of discomfort and a lot of angst. What's your assessment of what's going on?
They had to cheat their way to get into the euro, right? They had to lie and cook the books, with the help of maybe Goldman Sachs, but they managed to get in, and now they're holding everybody else hostage. It's unfortunate that they're even part of this experiment, although I didn't hold out a lot of hope for it from its inception, because I knew the moral hazards that were going to result from this, this group of nations coming together. And so this is not surprising me that these problems are here. But, what's going to happen now with Greece? First of all, you've got this group of politicians that were freshly elected. They rode a wave of populism. They promised to get tough with Europe, and they've got to put on a show for the electorate. They've got to act tough. But at the end of the day, I think that Greece has little choice. I think if they follow through with their, my way or the highway, we're going to leave the Eurozone, I think it would be a disaster in Greece. And I don't think the Greek politicians want to go through that. I think they're going to try to talk tough, but at the end of the day, I think they're going to have to compromise, because I think their journey is going to be a lot more difficult if they're not part of the euro. And I think for Europe, and for Germany in particular, I think there's a lot at stake here. People always talk about, well, what about Spain or Portugal or Italy? What might they do if Greece leaves? Well, I think Germany is more worried about what they may do if Greece wins some incredible concessions, because now everybody's going to want to be treated the same way. So I think if they're tough with Greece, that they have a better chance of towing everybody else into line. And if for some reason Greece does leave the euro and it collapses in a runaway inflation and debt, then it could be a poster child for what can happen, and it could scare the rest of the Europeans straight and force them to do the reforms that the Greeks have been reluctant to agree to.
What about Alan Greenspan saying that, the Greeks should, end up leaving the Eurozone? I mean, that's an awful big voice, and all of a sudden he's throwing his 2 cents in. Greeks could leave the Eurozone. Some people say, hey, you take that, 2, 3, 4 years of pain so you can unbridle yourself from all the, the overburdening debt and control by the European Union.
Well, certainly I think that the Eurozone would be stronger without its weakest member. But I think obviously the best thing that would happen would be that the Greeks cave and agree to real austerity, legitimate austerity, and shrink the size of their government and unleash some, entrepreneurial capitalism. That's what they need. They don't need austerity at the taxpayer level. They need it at the government level. They need, the free market. They don't need more government bureaucrats. I mean, these guys want to raise their minimum wage. I mean, they should be abolishing their minimum wage, not, making it harder to hire people when you have the economic problems that they do. So if they can get Greece to come around, that would be fine. But if they can't, they shouldn't cave in and just indulge Greece and, just funnel more money down that rat hole. They would be better off letting Greece go. And then, maybe if the Greeks will not cave into pressure from Brussels, they may ultimately cave into pressure from Athens, because if they're on their own, they're still going to have to be in austerity to get the economy going. It's just going to have to be self-imposed.
Well, what happens if they do make a deal and they compromise, so to speak, isn't Italy going to say, hey, we want our debt cut, we want to compromise? So Spain, I mean, they're going to have elections. They're leaning heavily towards, the comunista. And Ireland, they're going to want some, debt cut. Portugal, everybody's going to want a debt cut. Can the European Union handle that? I mean, to your point, your fear is them staying, and what do they have to do to make them stay? And what about all the other countries that would like to have their debt cut as well?
Yeah, look, that is the fear. That is the precedent that Germany and other countries are afraid to set. But, I think the mistakes were made early on. I think when the financial crisis began and various member countries were in trouble, I think it should have been made clear from the onset that there was no joint guarantee, that the ECB was not committed to backstop sovereign debt. I think that nations should be allowed to default. I don't think they should be bailed out by the central bank. I don't think the central bank should be monetizing government debt. And I don't think that the Italian government should borrow at the same rate of interest as the German government or the Spanish government or the French government. I think governments should borrow based on their own criteria. I mean, U.S. states, right? I mean, the municipalities, I mean, some issue debt at higher, interest rates than others because they're deemed more creditworthy by the markets. And I think you need that in Europe. And lenders need to know that if they loan money to a government that has a lot of debt, that there's a chance that they might not get repaid. That way they'll be reluctant to lend, interest rates will go up, and that will rein in the aspirations of politicians. But when you have the Germans subsidizing Greek debt, then Greek politicians are free to borrow a lot more money than they would otherwise be able to borrow if they were constrained by the higher interest rates that would be imposed by a market that was concerned about repayment.
If we don't, I want to get more questions about Greek and the Ukraine, not Greek, Germany and Ukraine and France. But if they don't make a deal, if Greece does say, that's it, we're going to be on our own, we're going to leave, we're going to use the drachma or whatever else, Bernie Sanders says the U.S. should bail out. Senator Bernie Sanders up in your neck of the woods says we should bail out, a Federal Reserve bailout of Greece with U.S. dollars. What do you think if there's no deal? What could happen with the whole Greek thing? Could it implode the European Union and cause a daisy chain of derivative default?
Well, I doubt that Greece leaving would set off that chain. In fact, a lot of the bonds that used to be owned by the banks are now owned by hedge funds, and so I think the losses now would not be as badly felt in the banking sector as they would have been several years ago. I think these bonds have changed hands, and there are a lot of people that own Greek bonds that didn't pay par for them. So even a haircut on these bonds doesn't necessarily inflict that much of a loss. It depends on what you paid for the bonds, whether or not you actually make money. But I don't think it's going to be a big disaster for Europe. I mean, there could be other things that take down Europe, but I think Europe is better off without Greece than making a bunch of concessions to keep them there, because then it's going to be a constant thorn in their side, and the concessions are going to have to continue to grow. And the more you empower Greece, now you give them some concessions now, and they know you got you over a barrel, and now they want more and more and more. So it's better to cut them off now rather than to incite this condition to fester and get worse and and embolden the Greeks and Greek politicians to think that they could, keep getting more and more from Europe. So the question is, what will an independent Greece do? Because once it's left to its own devices, yes, there's going to be a complete collapse. If they go back to the drachma, you're going to see a dramatic decline in the purchasing power of the drachma. Prices will rise dramatically. Real wages will fall. The economy will be a disaster, especially if the Greek government follows a Marxist playbook. If you look at the ideology of the people who were elected, it's a very socialist mindset, and obviously that's not going to work. So they would be forced to a more market-oriented approach. I mean, imagine if Greece were to become a tax haven. I mean, in fact, I've always thought if the Greeks really want to get something from Europe, threaten to abolish the corporate income tax, threaten to abolish the personal income tax for any European businesses that relocate to Greece. That could scare, the hell out of some of these higher tax nations. I mean, maybe that they might get all sorts of concessions if they were to turn Greece into the Hong Kong or Singapore of Europe. But, they're probably not even thinking along those lines, but they should.
You're saying that other things could bring down Europe. What, like what?
Well, what if Germany wants out? Because everybody's worried about the weaker countries wanting out. What about the stronger countries? The Germans, their tradition is a sound currency. The euro was sold to the Germans as the new Deutschmark, not the new lira, not the new franc or peseta. And so if the Germans are going to have to be forced to swallow this pill that, hey, we're going to have inflation, we're going to have a weak currency, they might not want it. And again, you've got this situation where everybody is encouraged to have debt because they push the problem off on somebody else. You have an incredible moral hazard inherent in the way this system has been designed. And they need to deal with these problems and find a way around them. Otherwise, ultimately, it will lead to the demise of the euro. But, I am even more concerned about the problems with the dollar. But, the dollar is benefiting right now because most people are just concerned about the euro. And so the dollar gets stronger as people sell euros and buy dollars. But they're missing the bigger picture that we have even more advanced problems in America with our currency than in Europe with the euro.
Such as?
Well, just the degree to the debt that we have, the degree to which we're dependent on artificially low interest rates, which are obviously unsustainable, the massive trade deficits that we have, chronic year after year. I mean, last week we announced the biggest monthly increase in our trade deficit in history. These are growing problems that are ultimately going to lead to a U.S. dollar crisis. I mean, right now people are confident in the dollar because they believe the Fed can raise interest rates and that we can actually afford to pay the higher rates, which we can't do. If the Fed raises rates, we have a financial crisis. We have no ability to service our debt if we have to pay a market rate of interest. But our creditors haven't figured this out yet. So they're content to clip coupons on low-yielding U.S. debt. But their patience is going to run out. I mean, we're talking about Greece. The real problems in Greece started when interest rates rose. Greece had a lot of debt before rates went up. But while rates were very low in Greece, it wasn't perceived as a problem because the Greeks could pay the interest. They couldn't repay the principal, but at least they can pretend they could afford it by paying the interest. Well, that's all the United States does. We have no hope of repaying the principal, but at 1% or 0%, we can at least pay the interest. But when our creditors have a more optimistic or more realistic outlook on our ability to pay, they're going to demand higher rates of interest, and we cannot afford higher rates of interest.
Which brings us to gold. There are a lot of people out there, Martin Armstrong, Mr. Brilliant Martin Armstrong, also Harry Dent. I don't know how brilliant he is, but there's a lot of voices out there saying gold's going lower. Gold's going to 700, 650. Of course, you're with Schiff Gold, and your book and part of your belief is to sell gold. That's why you do it, because you believe in it. Why are they wrong?
Well, people have been very negative on gold for years. In fact, the entire bull market, which really began in 1999, 2000, gold was below 300, and it went as high as 1900. People were bearish the whole way up. So bearishness on gold is not new. Some of the bears have become more emboldened because after so many years of being wrong, they finally were right because we finally had a couple of down years. But gold has not fallen nearly as much as the gold bears have expected. In fact, last year, 2014, gold was only marginally lower, maybe 1 or 2% lower in dollars. But in terms of every other currency, or just about every other currency, gold did very, very well, up 5, 10, 20% or more. You pick a currency, gold did very well. In fact, gold outperformed almost all the stock markets in the world in 2014. Thus far in 2015, gold again is beating almost all the stock markets, maybe all the stock markets. It's certainly beating all the currencies because the price of gold is not only up in dollars, but it's up, or not only up in euros and yen and Aussie and Canadian, but it's up in dollars year to date. I mean, maybe 8, 9%, or it was. I think it's pulled back a little bit recently on the optimism resulted from, the jobs numbers we got last week. I think that's false optimism. But the skeptics have constantly overestimated how much gold would decline. And they're still very negative on the price of gold, despite the fact that it's now really been rising for well over a year in terms of foreign currencies, and it hasn't been falling in terms of dollars. And you can really see that skepticism reflected in the price of gold stocks. I mean, gold stocks were really sold down based on the idea that gold prices would keep falling. And in fact, it hasn't happened. And, year to date, gold stocks are, outperforming probably any other segment of the market, as these real bearish forecasts about the price of gold are not panning out.
The Fed has been making these noises about raising interest rates in June, July, that the party's going to be over. They've been talking this game for a while. Some people say, listen, you combine rising interest rates with the global economy slowing down, and gold is going to take a hit. What say you?
Well, I don't really think that interest rates are going to rise very much. They may not rise at all. One of the reasons that the Fed has been talking so much about raising interest rates is because they don't want to do it. If they actually wanted to raise rates, they would have raised them a long time ago. But instead of raising interest rates, they just talk about their intention. It's kind of like, an overweight person constantly talking about the diet they're going to go on. Well, if they were going to go on a diet, they would just do it. They wouldn't be talking about it. But I think the Fed doesn't want people to realize that it can't raise rates, and so it wants to pretend that it can, and so it's been talking about it for a long time. Now they've got themselves into a box. Now people really expect them to raise rates. We'll see if they actually do. The jury's still out. I mean, if I were to bet, I don't think we're going to get a rate hike this year, but it is possible that we get some kind of trivial 10, 15, 25 basis point hike, and then that's all they do. Right now, interest rates at the Fed are 0 to 25 basis points. So if they made it 25 basis points, I mean, it's really not substantive. It's more psychological. But the question is, if the Fed even makes a small rate increase, what will that set in motion? Will the market now begin to anticipate more rate hikes faster, and the yield curve will start to bend based on this anticipation? And again, just a small increase in interest rates, given the enormity of our debt, could prick the bubble and produce a financial crisis and recession worse than the last one. And of course, what is the Federal Reserve going to do if higher rates put us back into recession? Well, they're going to cut rates back to 0 and launch another QE program. And it's even possible that we go back into recession before they raise rates, or we get close enough to recession that the Fed feels they have to act preemptively. And what does that mean? That means they got to restart QE.
Well, you had the head of Gallup last week openly worried about being able to make it home after he criticized the unemployment numbers that are bogus. And, we keep hearing this recovery story, and then we keep hearing stories behind it that say there is no recovery. What do we have? Do we have a recovery that'll end up raising rates, or do we not have a recovery? Do we have a bogus recovery?
Well, look, we had a recovery in the stock market. The prices went up. We had a recovery in the real estate market, if you're going to, look at real estate prices. But we didn't have an economic recovery. I mean, did we recover the jobs that we lost? No. I mean, we recovered jobs, but not the ones that we lost. We lost higher paying full-time jobs, and we gained lower paying part-time jobs. We lost manufacturing jobs. We gained service sector jobs. I mean, the jobs that we gained pale in comparison to the ones that we lost. The average American has a lower standard of living. Their real income has declined. Their real net worth has declined, despite the fact that we've hit new highs in the price of some of our assets. There hasn't been an economic recovery in the sense that most would expect. And even when they talk about the low rates of unemployment, I think the reasons for that are not that the economy has recovered, but in many cases, the economy is now so bad that lots of people who would prefer not to work at all have taken part-time jobs just to make ends meet. And a lot of people who want full-time jobs have settled for part-time jobs, and so they have some work. And a lot of people have just left the labor market altogether just out of disgust. And so, they're not working, but they're not counted in the official unemployment number. So that number doesn't tell the whole story. If you look at the labor force participation rate collapsing, if you look at, the types of jobs that people have, several people now have multiple jobs. They used to have one job, now they have 2 or 3. But that's not what they want. They'd rather have one good job instead of several lousy jobs where they, moonlight, from one job to the next. But the government could just point to the statistics and pretend that, oh, well, look, the unemployment rate is down without actually looking beneath the surface to discover, what is driving that decline. Is it really that, there's so many great jobs that everybody has one? Or is there something else, that's producing these statistics?
The 29-hour-a-week accomplice of the liars who concocted Obamacare. Thank you, Jonathan Gruber, for defining that for us. I want to finish one last. I'm sorry. What a big, huge policy lie. And Jonathan Gruber framed that for us.
Yeah, this is a big transformation, from a full-time economy to a part-time economy as businesses try to survive Obamacare. They try to restructure the way they pay people. This is what the president has decreed. And it's ironic that he does something that's so bad, yet somehow it results in a lower unemployment rate. It results in lots of jobs being created because, if you're going to replace full-time workers with part-time workers, the numbers are that you're going to have more jobs. You're going to have to hire more people to do the work if each one is going to work fewer hours. But now people have their hours pulled back. They're not making as much money as they used to, and maybe they have to get a second job, which also helps the president because now you have to get a second job, and it looks like there's more jobs being created.
Finally, and I know you anybody who manages a lot of money, and you do, worries about war. And you have Angela Merkel, leader of Germany, and the leader of France, Hollande, flying, to me, frantically to Kiev and Moscow. And they went to Putin. Putin didn't come to them. And so, therefore, they appear to be between the U.S. and Russia in what might end up being a pretty nasty war in Ukraine. France doesn't want it. Germany doesn't want it. Both of them do big business, particularly Germany, with Russia. And it's looking like this is not there. They're saying they're going to have a peace. We're going to try to let diplomacy work, but that doesn't look like what's happening, at least on the front page of USA Today, where they're blowing up, Ukrainian tanks, the Russian separatists, and we have a nasty war. What is that? One of your fears, the war fear in Ukraine, and also you can tack on ISIS in the Middle East?
Yeah, I don't spend that much time, worrying about wars. I mean, obviously they can happen, and when they do, it's destructive in general. I mean, wars are expensive, not only in human lives or suffering, but they're expensive to finance. I mean, they divert resources from peacetime purposes to wartime. I mean, we don't have an unlimited supply of resources of labor, and to the extent that we have to divert them to a war effort, there are less resources available to produce the things that we actually want, that make our lives better. And so if you're having a problem in the economy, a war is only going to make it worse. Now, oftentimes wars give politicians excuses because they can blame the problems on the war. And oftentimes, you can get the public to agree to things that in peacetime they would oppose. A lot of the things that happen in the United States, a lot of the taxes that we have, the income taxes, the estate taxes, those all came from the war. The withholding tax, the government used wartime emergencies to usurp powers that they never could have taken during peacetime. And then when the war ends, they never surrender the powers, which is why, I say that, Americans we've lost every war that we fight because we end up less free at the end of the war because of all the freedoms that we give up to win the war. So for that, in that perspective, politicians often have an incentive, to have a war, the kind of the wag the dog kind of phenomenon. But, I hope we can avoid some of those conflicts. I can't necessarily invest around them because I don't know how to necessarily anticipate them. But I do think that to the extent that there is war, they are historically financed more by inflation. Governments print money to pay for wars rather than raise taxes. At least that's the modern way to do it. And so it's good for precious metals. It's good for hard assets. Certainly, oil prices have come down. One way to get the price back up is to have some kind of war, particularly if it involves oil producers. And so, I think you have to be wary of the possibility. But I think my investment thesis would end up working well if the world, makes the mistake of venturing into war.
Your thesis is buy real things, gold, land, hard assets, things you own, and stay away from paper?
Well, I mean, I still own paper in the sense that if I own a stock certificate, right, that's a piece of paper. But what does it evidence? It evidences ownership of an actual business. And so I want to own real assets, but businesses. I want income-producing assets, not necessarily assets that just stay there. I want assets that are organized in such a way that they generate income for the owner of those assets, which would be me if I'm a stockholder of a company. But, I want to focus on countries that I think are making fewer economic mistakes, that have more freedom, less government, less regulation, lower taxes, sounder monetary policy, or less unsound monetary policy. And I want to invest in companies that are really well positioned to service what I believe is going to be almost a renaissance in the emerging markets when this dollar system crumbles and countries like China are no longer pegging their currencies to the dollar. They're no longer squandering the wealth of their people, warehousing dollars, stockpiling U.S. treasuries. Instead, they allow their own currencies to rise. They allow their own workers, their own people, to consume the products that they produce. And, I think you're going to see a big increase in the purchasing power of a burgeoning emerging market middle class. The people who have been buying our bonds are going to start buying their own stuff. And so I want to own companies that are positioned to profit from that transition. I don't want to be stuck with companies who are dependent on American consumers who have already run out of production, and soon we're going to run out of credit. And I think that Americans are not going to be great customers in the future because we're just not going to have the ability to buy the things that we're currently able to buy based on an overvalued currency and cheap credit.
Does this transition, will it also involve a crash and a meltdown in the system? You wrote a book called, the real crash, or talking about crashing markets. The real crash coming, or I can't remember exactly what the title is, but that's what it talks about. Is this transition going to...
Yeah, The Real Crash is, my most recent book. But yeah, I do believe that it's going to take a crash, and I think it's going to be a dollar crisis, a U.S. currency crisis. Something like they're experiencing now in Russia, but worse. And I think that's what's going to take to really put an end to this system. I think that until that happens, they're going to find ways of postponing the inevitable and kicking the can down the road. And I don't see any real pressure being brought to bear on our politicians or our bankers to rein anything in. Kind of like the situation in Greece. I mean, Greece is not going to do anything. Greek politicians are not going to go out on a limb and take a chance unless all of the other alternatives are exhausted. I mean, something is going to have to happen in order to force the type of, change that needs to happen. And, we need a lot of change in the United States. I mean, in many cases, you can argue that we're in worse shape than Greece. It's just that we can keep borrowing money so we don't have to deal with the consequences of all these problems. I mean, if Greece could keep borrowing money inexpensively, they could keep kicking the can down the road too. But inevitably, we're going to have to deal with these problems, but I think it's not going to happen until there's an externally driven crisis. We are not going to voluntarily get out in front of it because no politician wants to commit suicide. And so what you want to do is you want to deny that there's a problem, pretend and extend, but eventually when there is an external crisis that's pushed upon us that we have no control over and our backs are to the wall and we have no more excuses, then there could be some positive reform. But it is going to be in a crisis environment that is the catalyst for that reform.
Could that crisis come this year?
Well, it always could. I mean, it could have come last year and it didn't. And it's hard to say it's going to come this year because then if it doesn't come, say Peter Schiff is wrong. It's always hard to know when it's going to happen. And you can guess and think, well, there's a high probability it might happen this year. I know it's going to happen. The problem is the further into the future it happens, the worse it's going to be. Because until it happens, the problems are just getting bigger. They're not getting solved. And so when a crisis forces us to deal with them, the further into the future that crisis comes, the bigger the problems are when we're confronted with them. And so the worse it's going to be, the more difficult it's going to be. So I hope something happens this year, because if it doesn't, then it's going to happen in a later year. And it's going to be worse.
Peter Schiff, Schiff Gold, also the top guy at Euro Pacific Capital. Peter Schiff, thank you for joining us today on USAWatchdog.com.
Thanks, Greg. Anytime.